Investing in gold. For investors who prefer to purchase their gold from an established company, investing in gold can be a very safe way to do so. While buying gold on the stock exchange can pose great risks that can result in losses if the market moves against you, investing in gold can protect your investment at virtually no risk. There are two main methods that can be used to invest in gold. First, investors can purchase gold futures. The most popular method of investing in gold is to purchase gold as an investment through futures contracts. Investors usually purchase gold as a means of diversifying their risk, particularly during the volatility and speculative nature of the gold market. The gold futures market is subject to speculative volatility and speculation, as is any other market. Because many of these gold futures contracts are issued by financial institutions that offer both gold and securities, there is always a potential for the price to change and fluctuate from contract to contract. As with any other form of investing in the stock market or with futures, it is important to do your research and understand the risks involved before making a commitment to purchase or sell a futures contract. Other investors choose to purchase gold futures either by purchasing gold in physical form or investing in gold certificates. Investors typically purchase gold certificates and hold them in trust for future purchases. Gold certificates are issued by a custodian who holds the coins or bars that have already been purchased and have been minted. When holding gold certificates, you only need to make an initial purchase and then transfer ownership to a beneficiary to gain ownership of a bullion coin or other collectible gold item. Because this type of investment is not subject to fluctuations in the market, it provides a great way to diversify risk while still having a great amount of security. Many investors find that owning gold in certificates or bullion coin is an excellent way to invest while keeping the costs of investment as low as possible. Investing in gold coins is also a good way to invest in the gold market. These coins generally have a limited mintage, which means that the amount of coins in circulation is limited. The scarcity of coins in circulation can be an asset because they often increase in value when there is a shortage of them. Many investors are drawn to investing in these types of coins for this reason. This means that the value of the coin goes up when more people want them, or when the supply is cut off, creating an increase in the value of the coins. Most investors are attracted to gold bullion coins and other collectible items, because they are an investment vehicle without all the risks that are inherent in stocks, bonds, mutual funds and other such investments. By holding collectible gold coins and other collectible items as an investment, investors enjoy both a degree of safety and liquidity. They have a greater amount of security, although some investors do choose to invest in bullion bars and coins. While bullion bars and coins do have more risk than other types of investment products, they allow investors to invest in bullion coins and other collectible items at a lower cost than other forms of investment products. Investing in gold is not a simple decision to make, but it is an investment choice that have great potential for gaining rewards in the future. Because gold prices are on the rise due to a wide range of factors including globalization, the possibility to earn money through investing in gold is increasing. As more investors become more comfortable with the world's supply and demand, gold is likely to continue to rise in value and provide greater returns for their investments in the future. Thanks for watching. See you in the next video for more about wealth building and investing.